Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we're taking a closer look at Brookfield's private equity business, what our team has learned from over 25 years of investing and operating experience, and how AI is driving even more value creation looking ahead. With us today, we have Anuj Ranjan, Katie Zorbas, and Adrian Letts, three PE veterans who will give us an inside perspective on the ins and outs of this sector. Katie, Adrian, Anuj, welcome to the podcast. To get us started, can you introduce yourselves and share a little bit more about what you do at Brookfield?
I'm Katie Zorbas, and I joined Brookfield in 2008. I spent the majority of my career at Brookfield in the private equity business, and I've worked in a range of investment roles before moving to a role now leading our global strategy on fund formation, capital raising, co-investment syndication, and investor relations.
Great. Adrian, what about you?
My name is Adrian Letts. I'm the Global Head of Business Operations and Value Creation here at Brookfield's Private Equity. I joined Brookfield in 2022, and prior to that, I spent many years in leadership roles in digitally enabled businesses. And most recently, I was the CEO of a UK retail energy business, which was a buy and build. We did a number of acquisitions, growing that business from 500,000 customers to 5 million customers.
My name is Anuj Ranjan. I'm the CEO of Brookfield's private equity business. I've been at Brookfield for about 20 years. I started in Toronto and I've lived in Mumbai and also Dubai, where I helped build Brookfield's business in India and the Middle East. And today I'm based in London.
I think some people would be surprised to hear that our private equity business has been around for 25 years and was actually the first fund launched by Brookfield when we started as an asset manager back in 2001. Anuj, how would you define Brookfield's private equity strategy today, and has it evolved over time?
Our strategy has been pretty consistent in that we have done essentially the same thing over our entire history, which, to sum it up in one line, we are value investors driving operational transformation. We buy great businesses in industrials and essential services that support the backbone of the global economy, and we acquire them for value and then transform them through operational value creation. We identify value, we buy for value, and we create value.
And having seen the evolution of the business myself over the last number of years, we do have that consistent operating approach to value creation, as you mentioned. And today we've really sharpened our focus on core areas, which are the industrials and essential services. We now have a big operation in the Middle East with over $15 billion of assets under management there. And we're also doing a lot of work within the financial infrastructure space. Adrian, you joined Brookfield after a long career in industry. What attracted you to Brookfield's private equity business?
I think the most important thing that we do at Brookfield, which makes us very different, is our hands-on operating approach. And it's the operator mindset and the strategic heritage that we have that really attracted me. Many private equity firms talk about their operating capability, but really it's just a team of consultants or specialists that come in after the deal is done and try and problem solve. Brookfield's very different. It's a team sport. The team I lead work very closely with our investment team across the deal life cycle. So from origination, diligence into to ownership, we're intimately involved. We play a big role in developing the value creation plan in conjunction with our investment colleagues. And, it's something that I think we pride ourselves on, is working very closely together as Brookfield, but also with our leadership teams in terms of delivering value.
And a lot of the senior leaders on the team talk a lot about this roll up your sleeves private equity approach to investing. What does that really mean in practice?
Look, roll up your sleeves is really getting into the detail of the business. It's understanding the DNA of the company that we've bought, what makes it tick, what makes it special, why are customers attracted to that business, what are the opportunities, what's the cultural transformation that is required. And it's that deep knowledge and understanding that helps us really work together so closely with the leadership teams to drive value.
And I think it's something that our partners see as very defining about Brookfield, and our approach is truly differentiated. We have the operations and investment teams that are truly working as one integrated team from early stage due diligence to exit. And I would say that operator mentality runs really deep in our culture. We often send young investment professionals into our businesses to learn what it takes to drive change. And I saw that myself coming from the investment team earlier on in my career, where I spent time in a very industrious precast concrete manufacturer, which probably wasn't the most natural environment for me, but was a great learning experience, having worked alongside our senior operating professional on that investment. And I think overall, having that real life experience within operations, working alongside Adrian and his team, makes us all truly better investors. Adrian, maybe just building on that idea around the operational focus, can you share a little bit more about our approach and how we work with the management teams of our portfolio companies?
I think management teams, particularly the CEO, are foundational in terms of the success of an investment in a business. And one of the most important things for us is how we think about supporting both the CEO and the leadership team and the broader company in terms of execution and driving towards the value creation plan that we've come together to develop. It's rather like being a co-driver in a rally car. You're not in the driver's seat, you're in the passenger seat. You're not in the back seat shouting orders. You really are trying to help the CEO anticipate the corners, the bends, the bumps, and really giving them the best information that you possibly can to deliver and drive and negotiate what is often not a straight line in terms of ownership and value creation. And it's really trying to make sure that you've got that balance right of offering coaching and advice and support, but remembering that they're driving the car and really responsible for the investment.
Can you give us an example? Maybe use Chemilex, one of our more recent acquisitions within private equity, just to outline in real life how that works.
Yeah, so Chemilex was a carve-out of a carve-out. Chemilex provides thermal wiring for pipelines and helps to regulate the temperature. It's a very well-known brand and well-known business, and it's been dimensioned into a lot of existing pipelines, but it really was within another business and didn't have the sharp focus and clear value creation plan that we think it can have in terms of creating value. We identified in diligence some of the opportunities, some in terms of the operating efficiency of the business, some in terms of how it went to market and worked with its customers. We also identified that really there wasn't a strong CEO candidate, and this was something that was going to be really important. We worked to identify and hire a CEO before we actually closed on the business. We identified the key roles that we needed to fulfill. We worked with that incoming CEO on what the value creation plan was and supported them in launching a 100-day plan to really get momentum around what is probably going to be a 3 to 5 year value creation, but establishing the processes, making sure we had the organizational structure, supporting the CEO and key hires, getting momentum around that transformation, really making sure that we understood what were the quick wins and what were the longer term opportunities, and then putting the process and change and building that change culture in the organization to get real momentum in the business.
Katie, you've moved from a role in our investments team to one where you now speak to our partners all over the world every day. With that background, what's on our clients' minds? What themes and trends stand out to you coming out of those conversations?
There's a couple things I have learned over the last couple of years, having spoken with our LPs on a pretty regular basis. The first thing is just that our partners want to make sure that they're partnering with managers that are really good at what they do and stick to their core strengths. So for us, obviously, that's industrials, that's essential services. And so it often means focusing on managers where they have a real specialization in terms of sectors or the operating expertise. The second thing is our partners want to see co-investments. They want to see a tremendous amount of deal flow. And luckily for us, we've built up a pretty robust co-investment program over the last number of years. And it doesn't just mean access to deal flow. It also means access to information. With the Brookfield ecosystem and just the broader business that we have, we're able to provide a lot of those unique insights to our partners. And then the third thing on the broader macro trends, there's obviously a lot more capital flowing into alternatives today. But at the same time, we're also seeing a real industry consolidation occur. where LPs are focusing typically on a smaller roster of managers in many cases, and that has really benefited us over the last number of years. Sticking with the trends, but speaking more to the investment side of things, what are the tailwinds that are driving the need for private equity investment right now, Anuj?
I believe we are genuinely accelerating into the fourth industrial revolution, where AI, automation, and robotics are poised to deliver unprecedented gains in global productivity and therefore investor returns. There is a need to close this productivity gap in certain markets. For example, Europe, there's an ability to bridge some of the lower cost labor markets and some of the higher cost labor markets where the consumption of those goods and services are. The financial infrastructure, which forms the backbone of the global financial system, is being completely rewired as it moves from analog to digital to data to AI. And consumer businesses have already had to adapt, but there are a lot of businesses that haven't been through this transformation yet. Industrial companies, for example, where they're today changing their business processes to drive and improve productivity if they have the capital to invest in that kind of acceleration and if they have the knowledge to truly unleash some of those gains that they can have from AI.
Adrian, what about within our own portfolio? How are we using AI to actually enhance those value creation initiatives?
Before I answer that question, I think it's important to just think about the types of businesses that we're buying. We really invest in essential products and services businesses, industrials and services. Many of those businesses have a great market position and have a product that their customers really treasure and value, but haven't experienced the digitalization and haven't really been through the same technology transformation that many consumer businesses have. When you start to think about, look, we're buying great businesses, great market position, we're buying them for value, and then you overlay the opportunity to somewhat jump ahead to using things like AI and really using it to optimize business process, it's terribly exciting. And look, I think Bruce, our CEO, said it best. If you believe in the AI revolution, you've got to believe that there are going to be companies that are truly transformed by AI. And it's definitely, I think, in the sweet spot of the businesses that we own. If you think about some of the examples, Clarios, which is the world's largest car battery manufacturer, has really begun to leverage AI and digitalization in what they do, leveraging vast amounts of data to really understand their production process, reduce wastage, anticipate demand, and better manage their inventory. They're now in the process of installing smart sensors, which will measure everything across their manufacturing footprint, whether that be energy consumption, temperature control, machine utilization. It's going to really help them understand how they maximize the capacity utilization of their footprint.
At Brookfield, we sit at a pretty interesting vantage point, having invested across the value chain, whether it be the power requirements, the data center build-outs, or even some of the early stage technology. But to your point, we have hundreds of portfolio companies today within the ecosystem that will really be using all of those AI technology advancements to improve value. So let's maybe stay on that topic of talking about industrials. It's been a pretty overlooked sector over the last number of years, especially when compared to some of the growth of technology and changing consumer habits. What makes it so attractive as a sector of investment for us?
You're right. Industrials is often an overlooked sector. And thankfully for us, it runs very deep in our private equity DNA. These businesses provide essential products and services, as Adrian said, that often form the backbone of the global economy. They're often complex in nature, requiring a lot of hard work in a carve out or a take private that requires deep operating capabilities to unlock value. Because of this, we often find opportunities to acquire incredible businesses for value. Industrials is a very broad universe, but if you think about companies that provide these essential products and services to end markets that we understand very well, either linked to businesses we have owned in the past where we have a lot of expertise, or the broader Brookfield being one of the world's largest players in real estate and infrastructure, it allows us to have an angle and an advantage that often others can't underwrite. We've always had a focus on industrials, but today with the confluence of artificial intelligence, robotics, and automation, we see an even more incredible opportunity to help reimagine some of these businesses and reawaken nascent industries. We have always bought industrial companies and reshaped them and remade them. And now with the power of AI, I think we can transform these companies in a much more significant way.
Building on Anuj's comment, we see fantastic industrial companies in places like North America where they're looking to regain control and reshore and reimagine their capability. And to Anuj's point, one of the big challenges in operating in a market like the US is to be competitive. And it may be a skill set shortage, it may be labor challenges, but AI is certainly a productivity driver. Digitalization is certainly a productivity driver. Robotics and automated manufacturing is certainly an opportunity. And if you bring these things together, you take the types of businesses that we've talked about and you think about carving them out and giving them direction, creating a value creation plan, putting in a strong leadership team, leveraging things like digital automation, AI can make them truly competitive again and allow them to really grow and expand their proposition.
Switching gears to talk about the opportunity set that we're seeing today, I think everyone expected 2025 to be the year that investment activity really thawed across the industry. There was a lot of optimism heading into 2025. It hasn't quite evolved in that way, given some of the macro level uncertainty. But what's your outlook for the rest of 2025?
We've actually had an incredibly active start to the year. On the acquisition front with Chemelux and Antilia, our partnership with Barclays, which we recently announced. Around the world, we've got a very active pipeline, and it's helped by deal activity being back to a rational and more reasonable place. The key component here is it's the types of businesses we buy and the sectors that they're in. So essential products and services, those that are critical to the backbone of the global economy, these industrial powerhouses, they're a lot more resilient to short-term market movements and periods of dislocation. What that means is sometimes in an upswing market, they may not swing as far up as some other industries and sectors, but in an environment like today, where we've had some recent volatility, there's still great businesses that generate a lot of cash flow. And those kinds of businesses are always, I think, in vogue. They are always transactable. They're always financeable. And they're seen as businesses that can cut through most cyclical movements in any market environment. We've seen the strategic bid come back over the last 12 months. So on one hand, we're seeing conglomerates or strategics back to acquiring businesses of the kind that we own, which is very, very helpful and useful for the market. But we're also seeing a lot of opportunities to acquire assets from some of these same corporates as they look to rationalize their business and focus on their core activities. Given the recent market turbulence, we are seeing IPO and other monetization plans slowing, and sponsors and businesses are therefore also looking for flexible capital solutions to support their growth plans or to help with partial monetizations. And we see that accelerating over the coming months. If people have to hold their businesses longer and they can't realize that liquidity in order to progress on their business plans, they're going to need capital partners to support it, which is pretty exciting. We're really excited about the opportunities ahead for us this year. And I just say it's particularly in industrials and financial infrastructure where we see a large-scale transformation happening.
Let's continue on that trend and talk about financial infrastructure and what that means to us. We recently announced a partnership with Barclays to carve out and transform their payments business as part of our financial infrastructure strategy. Anuj, can you elaborate on what financial infrastructure means to us and the types of opportunities we're seeing?
Absolutely. People often ask why we refer to this as financial infrastructure. It's really the characteristics of the business. If you think about physical infrastructure as being physical assets that move people, commodities, or data, financial infrastructure are digital assets that move money. They form the backbone of global financial systems. This comes back to the opportunity. In many cases, this backbone financial infrastructure is crumbling. It needs capital. It needs significant investment to keep up with the pace of change in technology. Even prior to recent innovation in terms of blockchain or distributed ledger technology or AI, these systems were often out of date and needed significant technology investment in CapEx. But with everything that we have today at our fingertips, there is a big amount of transformation ahead. And all of these incumbents will have to invest significant amounts of capital to upgrade their systems to keep pace with this change and provide better value-added products and services to their customers. That is going to take trillions and trillions of dollars. And the best place to make that investment is not with the current incumbents or the current owners, who are often the major banks or major governments or major financial conglomerates of the world. It isn't their core business, and it's not where their capital is best deployed. We see a real opportunity for investors like us who understand how to invest in technology, who understand how to invest in infrastructure and treat it as such, to partner with the banks, to partner with the incumbents and help them transform these businesses and their systems. That to me is very, very exciting. And I think the opportunity is enormous.
This was a great conversation. I learned a lot listening to you and really appreciate you all taking the time.
Thank you.
Thank you so much. Enjoyed the conversation.
Thank you for having us.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.